Yogesh Malhotra, CEO and whole-time director of Gravita, who joins us right now on the show. Yogesh, good having you. Thanks for taking the time out. I hope all is well. Just give us a sense, Yogesh, of what you do, and has the scenario for your business changed from what for the prospects might have been, say, maybe 5, 6, 7 years ago?
Yes, to some extent it has changed, but primarily, I think that the investor community has just, they've just woken up to this huge potential of recycling industry per se. Consumers and companies all across the globe are now becoming more aware about the sustainability aspect of the products that they use, and they were always focusing, but it has growing over the years. But what has changed now in the past 2, 3 years in India is that the government has now focused on the rules and regulation aspect of this business as well. So earlier they were loosely formed regulations, but now with extended producers responsibility, battery waste management rules, end of life for vehicles, etc. All these policies and regulations are encouraging the recycling space overall. And not only are they encouraging recycling uh, aspect of business, but they are also promoting use of recycled products use of recycled content in all the products and packaging by consumers. So it is a major change that has happened, and we see the recycling business uh, as a growth. There would be a lot of growth that is still to come in this business, because it has only the regulations have only come just a couple of years back.
So, do tell us, I mean, if you're saying that investors have woken up to it, but maybe your business was anyways doing good. So have business parameters changed in that? What I mean to say is that, sure, more business is coming your way. Are you getting better pricing power? Maybe are return ratios improving, and are they slated to move up higher if all of this is happening? And then I'll come to growth, of course. But first I want to get the internals. Are the internals changing for you meaningfully?
Yeah, so so Gravita basically is a company that has pan-India presence. We have operations in India, but we are also present in, globally in various countries where we have our recycling plants. So we were always doing very well. We were doing well in overseas locations, and we were also doing well in India because we were importing a lot of scrap in India. But because of these regulations, now more and more of this scrap is becoming available to recycling companies in India, and that is what has changed for us in the past couple of years. And that is just the tip of the iceberg. The actual benefit of all these regulations is going to come in the next few years.
Okay, so how will the benefit be? I mean, will this benefit be seen in internal numbers and metrics as well? And again, I'm not talking about growth. I'll come to growth, of course. But what does it do? Do the benefits help you improve your return ratios? Do margins go up, or in this business, about 10% circa is the margin that you would probably maintain? How do these benefits get quantified in your numbers?
Yeah, so the margins would probably remain in the same line. There would be some increase because we are also growing more in value-added content. So currently around 40% of our revenue comes from value-added content, but our target is to increase it to about 50%. But these regulations would help us in assessing more and more of the products, the scrap from Indian market. And that is going to increase the capacity expansion. That is also going to help us in utilizing the capacities better. Currently, our capacity utilization is around 60 to 65%. And with these availability of domestic scrap, it is going to increase to around 70 to 75% in future. So that is another part that is going to help us. Apart from that, this business would reduce the working capital cycle for us. Currently, we are importing a lot of material. The material domestically would have a smaller working capital cycle. So this will improve ROC for us in the future.
Okay, so again, I'm deferring the growth question for a moment, and I will come to that, Yogesh, because that is what everybody thrives on. But I love these internals. So I would love to know, when you're saying that ROCs could improve, could there be a material change in what your return ratios have been in the last 2-3 years? Because even last 3 years, you've seen growth, right? From 1,400 crores to nearly 3,000 crores, you've grown at over 25% CAGR. Have ROCs improved in that period? Excuse me for not having the number at hand. And where do you see these numbers moving to, let's say, in the next 3 to 5 years on the return ratios?
So I mean, if you talk about 2 to 3 years back, our ROC was in the range of around 19 to 20%. Currently, it's upwards of 25% in each and every quarter that I mean, for the past 3 to 4 years. And we believe that it will remain in the same range of more than 25%. And that is partially because of, as I mentioned, availability of Indian domestic scrap. And also because we are getting some economies of scale. Apart from that, there is also value addition from other commodities that we are dealing into now. Because earlier we were only doing lead recycling. Now we are doing aluminum, plastic, rubber recycling also. And in the future, we have plans to go into some other verticals of lithium-ion battery recycling, paper recycling, and steel recycling outside India. So all these and some of these verticals are more profitable than the existing lead business. So that has also helped us increase the ROC in the last few years. And going forward, also it is going to be in the similar way. So we would expect around 25% ROC at the minimum in any new business also that we go into.
Okay, so the base is set at 25. You could probably inch higher, punch higher, but certainly return rate or return on capital would be about 25%, which is great. So okay, now let's talk about the core growth. You've grown at, I mean, the headline numbers over 25% in the last 3 years CAGR performance. Estimates are that in the lead business, you'll probably do 21-22% CAGR for the next 3 to 5 years. But aluminum, plastics, etc., grow faster. I heard you say that you're also thinking of battery recycling, paper recycling. So I would love to know your core business, which is 88%, if it grows at 22 to 23%, is that predictable for the next few years? And does it remain at 88% or does that come down as the other businesses grow up?
So yes, sorry. So yes, the lead business would grow. It will continue to grow at around 18 to 20%.
Oops, I think we've just lost that. We'll try and repatch that line. But remember, viewers, lead business has grown at, okay, whatever number it has grown at, the management says, or Yogesh says that it'll grow at 18 to 20%. Sorry, Yogesh, if I have you back, I'd love you to start from the beginning. I think you were saying that the lead business will grow at 18 to 20%.
18 to 20%, yes. The other business of aluminum, plastic, and rubber is going to grow at much faster pace because our base is very small in all these categories, and potentially they have the potential to go as big as lead business. So we are expecting around 35 to 40% CAGR in all these new businesses, and that is a minimum CAGR growth that we are expecting. And going forward in the next 3 years, we estimate that the overall lead business would be around 70% of the total revenue that we get. And balance 30% would come from other three verticals of plastic, aluminum, and rubber. And in addition to that, and this will contribute to around 25% CAGR volume growth in the next few years. And in addition to that, as I mentioned, that we are also planning to go into lithium-ion battery recycling, into plastic, into paper and steel recycling outside India. So that will contribute even further to this 25% CAGR growth that we're expecting from the existing verticals.
So okay, so you are saying that your CAGR performance could be 25% for the next few, which I presume would be 3 to 5 year period. At the bare minimum, yes, if the other businesses come in, it could add to those numbers. When do the other businesses come in, let's say, in the next couple of years or slightly beyond that?
So we are expecting lithium-ion battery recycling business to come up next year. We have already set up we are already in the process of setting up a plant at Mundra for lithium-ion battery recycling. The other businesses of paper and steel would probably take a couple of years. So you can expect it in next 2 to 3 years, both these new verticals.
Okay. And so Yogesh, help me decipher as we wrap up this conversation in the next couple of questions. But you would grow at, let's say, 25% CAGR for the next 3 years. Just play with me, just be with me for the time being. 25% for the next 3 years without your capacities having come on stream. and then a lot of your capacities come on stream over the period of the next 3 years, which means as one of the notes, one of the research notes is suggesting that you will double your capacity in the next 3 years. So are you setting yourself up for doubling? So let's say you grow at 25% CAGR for the next 3 years, which means you double your top line from 3,000 at the end of FY24 to circa 6,000 at the end of FY27. And then your capacity doubles, and therefore, are you in a position to be able to grow further 25% from that double revenue post FY27?
So the capacities would go up from 300,000 to 500,000 metric ton per annum in the next 3 years. And that will help us achieve the figure of doubling the total volumes, because we would also increase the capacity utilization going forward, which is currently at around 60 to 65% to around 75% in the next 3 years. So that will contribute some part. And yes, so we give a rolling vision of the next 3-4 years, and that is for the past 3-4 years has been consistently for around 25% CAGR. So we are very confident that there is enough steam left to increase capacities because it's still a totally barren industry. There is still scope to increase capacities both in India as well as in overseas locations, and there are opportunities for merger and acquisitions also which we are eager to go into. And as I mentioned, that we are also planning to go into new verticals of lithium-ion battery recycling,
Right.
rubber and paper and steel recycling. That would also give you a momentum to take this 25% growth
Got it.
rate for quite some time to come.
Okay, Yogesh, one very quick question before we wrap up. Would you need to do any equity fundraise to fund any of your capex or acquisition costs?
So the capacity that we are talking about from 300,000 to 500,000 tons would come from internal accruals only. And we would require around 600 crores in total, of which 400 crores will go into current verticals, plastic, aluminium, rubber, and lead, and around 200 to 250 crores would go into new this thing. But
Agreed.
all this would come. This would come from internal accrual. But we may raise equity in case we have to go and for any merger and acquisition.
Anything on the anvil, Yogesh? Very quickly, we need to wrap up. But anything on the anvil?
So we are expecting the same 25%.
No. What I mean is any acquisition that is slated to happen in the next 6 months for which you need to raise equity capital.
So we are continuously looking for some opportunities, and we have some opportunities in hand, but we can't say at this moment whether we are going to go and do some.
Got it. Okay, Yogesh, lovely talking to you. All the best. Keep on doing the good work, and thanks so much. We'll look forward to talking to you post your Q2 numbers.
Sure. Thanks a lot. Thank you very much.
That's Gravita India.